The solution to this is more transparency on the institutional side, not less access and ability for retail. But I'm telling you, these kids are catching up fast because they know what they're doing too. And the reason they know what they're doing is because of companies like Google and things like the internet that just make every piece of information available. They give you access to compute resources. You could be a kid sitting at home writing models into Google Cloud that give you the same compute power as the best hedge fund, as the best investment bank. And this is what I'm trying to get across to you guys, is we are leveling the playing field. So this morning I woke up after spending all last night in WallStreetBets, reading about all of this stuff. I ended up closing up my position this morning, and I wanted to announce that I'm taking all the profits that I made, plus my original position. So I'm going to take $500,000, and I'm going to donate to the Barstool Fund for Small Businesses. I think that what you're seeing is essentially a pushback against the establishment in a really important way. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into WallStreetBets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and frankly a better job than a lot of hedge fund analysts that I work with. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs, and they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means, but I think it takes an enormous amount of faith in the system to be that transparent, to talk about things, and then for each individual to make their own mind up and to do things, whether it's to buy and to sell. And I think that what it proves is this retail phenomenon is here to stay. There are 2.7 million people inside of WallStreetBets. I think that they are as important as any hedge fund or collection of hedge funds. There are fundamental momentum investors in the market that are organized capital, i.e. hedge funds, and disorganized, loosely affiliated capital, i.e. WallStreetBets. And I think what you're seeing is the push and pull of that. And the realization should be that if every person was forced to publish their fundamental research, it would be hard to distinguish the best version of research from WallStreetBets and the best version of research from a hedge fund. They don't have an edge. Let's look at Tesla. Who was right on Tesla? I'll tell you who was right. Every single retail investor. I was right. Elon Musk was right. Let me tell you who was wrong. Every single hedge fund. Name after name when it comes to innovation, when it comes to growth, when it comes to people trying to do fundamentally useful things in the world. If it doesn't fit into the mold that Wall Street wants, they try to organize against it. And there has been pushback after pushback after pushback in individual names, and this is yet another form of pushback. Why is it allowed for somebody running a hedge fund to basically claim that they are market neutral, but be levered up? They take a $10 billion fund, and their prime brokers allow them to run $100 billion notional exposure. Who thinks that that's fair? It's not fair to the retail investor, because when that blows up and a $100 billion hole exists in a fund, which, by the way, this is exactly what happened in 2008, the government bails them out. Who is the government? All of us. It's allowed to happen so that hedge funds can charge 2 and 20 to their limited partners, independent of consequences. I'll tell you another way that it's allowed to happen. Hedge funds are allowed to take their money, go to a prime broker, and all of a sudden get 10x multiplication on that money. That's the problem. You have trillions of dollars of notional being traded by these organizations. You have maybe billions of dollars being traded by retail. When I saw that article in the Wall Street Journal, I had no idea about Melvin Capital, really. I had no idea about WallStreetBets, really. I had no idea about GameStop, except that it had been mentioned to me in a couple of tweets throughout the year. So I tweeted out after I read the article, hey, folks, tell me an interesting trade that I can put on tomorrow for a few $100K so I can learn, basically. That tweet got 10 million impressions and 13,000 comments. And when I went through there, a lot of people pointed to GameStop and pointed to WallStreetBets. And when I went in there and started to look around, what I thought is, my God, here is a dynamic about trading, about momentum, about stocks, about short interest, about gamma squeezes. These are not things that I know a lot about. And so I put in a small position to learn. And what I learned is that people can do fundamental research, come to a point of view that's diametrically opposed to organized capital, and they can be right. Idea dinners, that concept has existed for decades on Wall Street, where people get together in closed rooms behind closed doors and usher around names of companies, and they coalesce and decide to cooperate together. The guys on WallStreetBets just do it in the public completely transparently. In my opinion, that takes a lot more courage. If you are going to so massively oversell a company to the extent that you're selling 40 more shares of that company that don't exist, and all of a sudden other folks are like, hey, wait a minute, this is going to get squeezed, and they buy it, that's just a smart trade. Retail saw it, Wall Street missed it, and they paid the price. So maybe to your point, Scott, what regulators should do is say, hey, wait a minute, how can we allow companies to be 140% short? That doesn't make any sense. You're really discounting how smart so many of these people are. Okay. And all I would encourage you to do is spend a little time in these forums, go into the Discord server, and you're not going to hear a bunch of bros just sloshing around. You're going to hear a bunch of really, really smart people talking about things in fundamental ways. There is a small part of momentum. There is a part that's fundamental analysis. And then there's a part that's just sticking it to the man. I'm not taking you away from that. But the reality is it's all allowed in a free market. And all of a sudden, if you start to gate decisions by individual people, all you're going to do is systematically lock in institutional ways of making money for institutional clients. And I don't think that's the solution. If you want to go and address the solution, fix how risk-taking happens at the institutional level, fix the precondition, fix the ability for these stocks to be so massively shorted in the first place. For example, why isn't there more transparency in the reporting that hedge funds have to make? Every long position, every short position, and all the leverage they're taking every day. Why don't we do that? So if you want to fix it, I think you got to go and ask for the same transparency, because you can't all of a sudden have your cake and eat it too. Let's have hedge funds operate in the shadows, but let's then basically lambast WallStreetBets because they actually have the courage to write their stuff down publicly where anybody can see it. You have to be cognizant that we are moving to a world where normal, ordinary folks have now access to all the same information as institutional organized capital. And they will come to many of the same conclusions, sometimes at the same time, oftentimes faster, and sometimes to the opposite conclusions. The solution to this is more transparency on the institutional side, not less access and ability for retail. If you want to make the system better and healthier, force more transparency on the institutional side. Gary Gensler should get these guys to be just like what Cathie Wood does at ARK. It's so healthy for the ecosystem. What am I buying? What am I selling every day? What are my risk limits? Just make it transparent. But I'm telling you, these kids are catching up fast because they know what they're doing too. And the reason they know what they're doing is because of companies like Google and things like the internet that just make every piece of information available. They give you access to compute resources. You could be a kid sitting at home writing models into Google Cloud that give you the same compute power as the best hedge fund, as the best investment bank. And this is what I'm trying to get across to you guys, is we are leveling the playing field. You have to understand and believe that there is so much information out there that people can be on a level playing field. And that the most important thing we need to do now is shine the light into the corner of the market that is still opaque. And there is only one area. Companies are forced to publish every single thing about themselves transparently every quarter, okay? ETFs publish their positions every day in some cases. Retail talks about what they're doing with transparency every minute. But institutional capital can still hide.